All right, let's get right into it. The big story today, no question, was a massive relief rally that just ripped through the markets. And it was all powered by one single powerful catalyst, a little glimmer of hope for peace in the Middle East. We're going to break down what this all means for the market and, more importantly, for you.
So, what happens when all that fear that's been hanging over the market for weeks suddenly bumps up against the real possibility of de-escalation? Well, today, we got our answer. And it was a huge reversal that sent stocks flying and oil prices tumbling. Let's dig into exactly how this all went down.
Looking at the board today, it was just a sea of green. You could almost feel investors breathing this collective sigh of relief. And that optimism, well, it was everywhere, across all the major indices, with tech and growth stocks really leading the charge.
The S&P 500, our benchmark for the whole market, closed up a really solid 0.89%. It took back a lot of the ground it lost recently, and it's a pretty clear signal that investors are willing to take on a bit more risk again.
And the Dow Jones? It had an even stronger day, climbing almost a full percentage point. This shows that the big blue chip names, those large, established, reliable companies, were right there in the middle of this broad-based rally.
But leading the pack, for sure, was the tech-heavy Nasdaq, which surged 1.2%. And what that tells you loud and clear is that the growth-oriented stocks were the ones that got the biggest boost from today's good news. But it's interesting, the rally wasn't even across the board. What we saw was a classic case of sector rotation. As those hopes for peace started to rise, money just flowed right out of energy stocks, which had been pumped up by that war premium, and poured directly into growth areas like technology and healthcare. Okay, so let's zoom in a little bit and see how this all played out for individual companies. Because beyond the big numbers, there were some absolutely incredible stories today that created some huge winners and, a few notable losers too.
The single biggest stock story of the day, hands down, was ARM Holdings. The company made an announcement that just completely changes the game for them, and boy, did it send their stock into the stratosphere.
So here's the deal. For the first time in its 35-year history, ARM isn't just going to license its chip designs anymore. They're actually going to manufacture and sell their own high-performance AI chips. They think this could be a $15 billion a year business. And with partners like Meta and OpenAI apparently already lined up, investors just piled in, sending the stock up a massive 18% today.
Wow.
And taking a look at the broader scoreboard here, it wasn't just ARM. We saw some huge gains in biotech from Sarepta Therapeutics and in e-commerce with Chewy, which reported fantastic earnings. Now, on the flip side, the losers were a bit more scattered. A name like KB Home fell after a weak forecast, which just goes to show you that even on a huge update, the specific details for a company still really matter.
So if you take just one thing away from the market's internals today, let it be this. It was a tale of two sectors. Optimism about de-escalation and the future of AI fueled this big rush into growth stocks in tech and healthcare. At the exact same time, that same optimism directly hurt the energy sector as oil prices dropped.
All right, so now let's get to the main event, the core driver behind everything we just talked about. Why the sudden wave of good feeling? Well, it all goes back to a major diplomatic development in the Middle East. It was basically a perfect chain reaction, like dominoes falling. Step 1, reports came out that the U.S. delivered a pretty detailed 15-point peace plan to Iran. The instant that news hit, boom, oil prices tumbled over 5% because traders started pricing out the risk of a wider conflict. That in turn eased inflation fears, which gave everyone hope the Fed might not have to be so aggressive. And the final domino to fall, the huge stock market rally we saw all day long.
And this brings us to a really key idea, the geopolitical risk premium. Think of it like this. For weeks, the price of oil included this extra cushion, this premium to cover the risk of a major disruption. When that peace plan was announced, a huge chunk of that premium was just instantly erased. And that's why even just the prospect of peace had such a massive immediate effect on prices.
So what are the experts, the analysts saying about this big rally? Well, the general feeling seems to be one of cautious optimism. I mean, today was great, but nobody is spiking the football just yet.
This quote pretty much sums up what everyone's thinking. Analysts are calling it a classic relief rally. The market isn't reacting to a finished deal, it's cheering the potential for one. The key word there is potential. The underlying situation is still very, very delicate.
And as for ARM, the day's biggest stock story, all the praise was nearly universal. Analysts at Jefferies called the move a total game changer.
And they jacked up their price target to $210. They see ARM going from just a chip designer to what they call a full-stack player in AI, and that has massive implications for the long run.
So, what does this all mean for you, the investor, looking ahead? Well, if today taught us anything, it's just how fast headlines can move these markets. And that kind of volatility, it's probably here to stay for a while.
As we look forward, the picture is pretty balanced. You've got clear risks on one side and real opportunities on the other. The biggest risk, obviously, is that this peace deal falls apart and oil spikes right back up. But the opportunities are just as real, especially that long-term AI growth story and the fact that, through all this, corporate earnings have stayed surprisingly strong.
So for those of us who are in it for the long haul, trying to navigate all this up and down, it's a good time to understand the idea of portfolio hedges. Basically, these are assets that can act like a cushion during downturns, almost like a form of insurance for your investments. Two of the most common hedges out there are gold and government bonds. In times of fear, people often run to gold. It's a physical asset that's seen as a safe place to store value. And similarly, when investors get nervous and sell stocks, they often buy up safe government bonds. That can cause bond prices to rise, which helps offset some of the losses you might be seeing elsewhere.
Okay, before we wrap this up, let's just quickly hit a few other big headlines from what was a very, very busy day in the markets.
Over in the healthcare world, we got a huge deal announced. Merck is buying Terns Pharma for $6.7 billion. This is all about boosting Merck's pipeline of cancer drugs, and it tells us that deal-making in the biotech space is still going strong.
And finally, this one is a really big deal for the IPO market. Reports are flying around that SpaceX could file to go public as soon as this week. This could potentially be the largest IPO in history, and it's definitely adding another layer of excitement to the market right now.
Which really leaves us with this one last thought. Today's rally was all about relief from geopolitical fear, no doubt. But when you look at the strong corporate earnings and these powerful growth themes like AI that just keep pushing forward, you kind of have to ask, is the real story here just how incredibly resilient this market truly is? Something to think about. That's your market breakdown for today. We'll see you tomorrow.